Call a roll, Paul.
Alderman Nelson.
Here.
Alderman Hanneman.
Here.
John Howard.
Here.
Stuart Kusick.
Here.
And so you do have a quorum.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Liberty and justice for all.
Okay. Citizens' comment period. I don't see any citizens. That approval of the June 22nd minutes.
I move approval of the June 22nd, 2021 minutes.
All those in favor say aye.
Aye.
Motion carried. Are there any? I should say. Motion carried. Report on available resources and potential applicants.
That was an old
Yeah,
agenda.
that's the old. Establish dates and agendas for the Finance Committee review of the mayoral recommendation.
So the council will receive its first look at the mayor's recommended budget on Tuesday, September 21st. And then the council will send the budget to this committee for review. And last year was the first year in a
I can hear the other meeting.
okay. It's just we have to, for public purposes, we have to leave the one door open.
Okay, yeah.
This
No,
one's okay.
it was like coming right through the hallway. I'm sorry.
I hear it. No, just, we have to make sure the public understands it's an open meeting. We'll receive the budget and we need to report back to, or this committee needs to report back its recommendations to the Common Council at its second meeting in October, so that the public hearing notice and the public hearing can take place on the budget for adoption later in November. The schedule last year, all view of the budget at its first meeting, and then hold meetings with department heads, and we've split that into two groups, public safety and health and conservation and development being one night, public works, the other large group of departments, general government, a large group of departments, general government, and recreation on the second night, and then a follow-up meeting to look at TID's debt service, total tax levy, and other kinds of issues that might come out of the budget review. If we follow that process of those four meetings, this year with the way the calendar works, we have an extra week, but the several council members might be meeting out a little bit, because with the council meeting on Tuesday, then there's a Thursday, but I don't believe either of these two aldermen are members of that group. Neither of you are on the plan commission, correct?
Not yet.
Not yet.
She's the heir apparent.
No, I know nothing yet.
Okay. So potentially that opens up, where 4th happens to be the first Monday of the month, and sometimes Common Council has a committee of the whole meeting that night. So we purposely avoided recommending that for a meeting night. Common Council would meet on Tuesday the 5th, but we're wondering whether or not you might want departments, and then on Monday night, the 11th, for the second group of departments, and then meet the following Thursday again. So it'd be Tuesday, Thursday, Monday, Thursday, if you will, with a week in between, to have the four meetings to review the budget. And we would not have the four meetings to review the budget. And we would not have any other agenda items on the Finance Committee for any of those meetings.
I like that.
Because just the way that works. But I'm open to suggestions, because we're trying not to have the alderman here if it's a regular meeting night and then you had another commission alderman here if it's a regular meeting night and then you had another commission, some other commission meeting and then finance, that becomes a bunch of stuff. So, Alderman, I don't know what other committees you're on as to whether or not how that fits into this schedule.
I like it.
This schedule.
I like it. So the 7th would be the first meeting?
Well, the
Of October?
28th, Tuesday the 28th, which would be our normal, regularly fourth Tuesday of the month. September 28th.
Okay.
And then possibly that Thursday, the 30th. Skip the next week. Oh,
I just thought you said the 7th, 11th, and 14th of October.
well, we could do the 7th and skip the 30th. So we do the 28th, the 7th, the 11th, and the 14th. You like that schedule?
I will likely have a conflict with to bump back to having a meeting on the 6th or the 7th, but certainly go with majority. Yeah.
So the 7th, Wednesdays are a possibility, but that would just mean the aldermen are here on Tuesday night for your regular council meeting and then again on Wednesday night for your regular council meeting and then again on Wednesday night with a possible another meeting that night too. So that becomes 3 meeting nights in the same week, depending on how you do it. And I tried to break it up when I did this so that you didn't have meeting ad infinitum. So one of the suggestions is the 28th, potentially the 30th, the 7th, and then the 11th, and not on the 14th.
Yeah.
John?
Fine.
Stuart?
Amenable,
You're amenable.
amenable.
You're amenable. So I'm hearing the 28th, the 30th, the 7th, and the 11th.
6 p.m.?
Well, last year the committee started at 4 p.m. and so you were typically done by 6.
Did it last year. We'd had a little break for dinner
And we
and
took a little break around 5:15, 5:30, and then finished up. And typically, I think you were done by
we did not have
6:37.
terribly late nights.
No, and I think the department heads like that a little bit better because they're not into the late evenings.
It's just really hard to then give your full attention and really think through. And this is important stuff. They really deserve our clearest heads.
So you said again the 30th, the 7th, and the 11th,
Yes,
4 p.m.,
Well, the 28th is,
yes.
4 p.m.
well, the 28th is.
28th would be the first one. 30th, 7th, and 11th.
28th being a regular.
But we would be focused strictly on the budget. We wouldn't have anything else other than approval of minutes and public comment if there were any.
Could I request, if anybody's got an issue, could we do public safety on the first meeting on the 28th? I mean, when you assign them, how do you do that?
Well, we typically like to give the group a topside vacations, personnel head counts, and those kinds of things before we got into the actual departmental stuff.
Well, I'm just going to ask if we cannot do public safety on the 11th because I have a conflict at the 11th.
Public safety would typically be on the 30th then.
Excellent.
The 11th would be the summary at the back end because that debt service, total tax levy. And Alderman, you're saying you have a conflict that night?
Yeah, I have to be at every town board meeting. This is once a month. It's the second Monday of the month at 5:30, and I always present the stats and everything for the PD for the month. But I mean, I could be here at 4, as I'll at 5, so I could be here for the first hour.
Could I request a motion then that the committee would then set meeting dates on September 28th, September 30th, October 8th, September 30th, October 7th, and October 11th, budget review?
I will move that the Finance Committee set meeting dates for September 28th, September 30th, October 7th, and October 11th at 4 p.m.
I'll second that.
Okay, been moved in second that we have the meetings as designated. All those in favor, say aye.
Aye.
Opposed?
Even though it's a regular meeting?
Yes.
Okay. Resolution engaging Melman. Okay. Resolution engaging Melman. The actuarials.
So just by way of background, to complete the annual financial report for the city, actuarial reports are prepared on a number of employee benefit plans. Because the city has an other post-employment health plan for retirees, we have every other year, and then it covers 2 years worth of service. The actuary we've been using has been working with the city since the city established the plan in 2008, but that individual has retired, and he's handed his block of business off to an actuarial firm in the Milwaukee area actuary. So knowing that we had to make a change in actuaries, I went out and sought proposals from the successor actuary, the one that our current actuary has sold his business to. And then I polled Milwaukee area came up. One was Key Benefit Concepts and Milliman. And then I believe I've given you summaries of the proposals from each of those firms. Milliman is a very large firm, national firm, but they have an office in Brookfield. And national firm, but they have an office in Brookfield and do a fair amount of work here in Wisconsin. Because of the size and the number of professionals they have in that, and the fact that we have actual plan assets, which many communities in Wisconsin do not have, they can assist us in doing some of the plan asset planning that needs to be done. And so staff is recommending that we engage Milliman. The quotes for the services were comparable for all of them. If you look at a multi-year quote, Milliman gave us it was a 4-year quote, probably also one of the better quotes in terms of total fees. They are higher than what we've been experiencing, but that was true from all the firms that we received quotes from. They were all higher than our retiring parties. So staff is recommending that we engage Milliman to provide the actuarial services for a multi-year agreement.
I'm going to say why the third year was only 45.
They didn't plan on doing a full actuarial study. They would continue to carry forward their study from 2 years prior. And that was why they had a lower fee in that. They didn't want to do that anymore because there could be enough changes where they'd want to do a full-blown study.
I move that we recommend the engagement of Milliman to provide actuarial services for the City of Franklin post-employment benefits plan for 2021. Post-employment benefits plan for 2021.
Second.
It's been moved and seconded to approve Milliman and professional firm to do the actuarial study of City of Post-Employment Benefit Plan 2001 and forward. All those in favor say aye.
Aye.
Opposed? Carried.
So you will note that we have been talking about investment policies at several of our last meetings. We actually have 3 investment policies. You've looked at 2. Now you're looking at the third one. This investment policy is the policy that covers financial reserves of the operating and other funds of the city. On the back of the first page, I've given you a multi-year history of how many dollars have been invested with the 3 different primary investment managers that we have, as well as on those portfolios over a number of years. So I gave you month-by-month data for 2020 and 2021, while you have only annual data for the other. On the left-hand side of this is the reserve portfolio. So if you will recall, when you look at our reserve portfolio. So if you will recall, when you look at our annual financial report, the city probably has $9 million thereabouts in the general fund, which is sort of the low point of the year, and then several of the other funds have a few $1,000,000. So we have been keeping anywhere from $10 to $18 million in our reserve portfolio, which is a portfolio we generally never tap into. Then we have what's called the liquidity portfolio, which is what we tap to cover payroll costs and other kinds of operating needs or annual needs. And what I've given you is the average various years, as well as the return that those portfolios have given on an annualized basis. Because the liquidity portfolio is typically kept in very short-term money, typically it's on-demand type deposits with maybe a few CDs in it, you'll see that the rates of return on that, and that's been true for a number of years. On the converse side, the reserve portfolio is a stacked set of maturities of longer term, of various treasury and treasury-related kinds of items. To give you an idea of what that looks like, I'm going to ask you to look at the financial report that you have for the month. And page number 6 is a report that you see regularly, but now you'll kind of put this both together and it'll make some sense. But that tells you what's in, at the end of June, what's in each of these portfolios, and then at the bottom, what's in, at the end of June, what's in each of these portfolios, and then at the bottom, what the maturity schedules look like. So American Deposit Management is in the liquidity portion, and you can see that now there's a number of CDs that go all the way out to 2023. That's unusual. We don't have that. And then if you look at the institutional capital management, where in other years we've had $13 million, nearly $19, $20 million, now we're down to less than $11 million in that, because when some of those securities came due and we were able to reinvest, we would have invested at 3-year money, but we pay the investment manager 15 basis points to manage it. So we would have netted even less than what we were getting in the liquidity portfolio. So essentially, I moved the money over to the liquidity portfolio and bought some CDs that netted me about 0.5 point. This isn't to go out there and maximize returns. It's liquidity and safety are the primary items, but we're managing it that way. Hopefully, as the investment returns on shorter term money move up a little bit, we can move money back to the reserve portfolio, but you can see how things are moving back and forth. So I only directed you to the financial statement because you can see then how these two portfolios relate and how they're invested. Going back to the action sheet on this particular one, when I read through the investment policy, there were a couple of changes that I felt would be warranted. And hopefully they're in red on your document. Yes? Okay, so in the first paragraph, items that are for fiduciary funds, and I said these are used to fund the city's governmental and business type funds, because that's how they're being done, and I think it's a more positive statement about what these investments are related to. Under the scope, old policy and the existing policy says that the accounting supervisor is a backup for that individual has no expertise whatsoever, and I don't think that's an appropriate person to name, and I'm recommending that that be dropped. Now, it leaves myself and the deputy treasurer to manage the funds, and even the deputy treasurer is very comfortable we're moving money in and out of the liquidity reserve, the reserve portfolio, except to take what I'm saying are maturities and then move more future monies over. The other change that I'm suggesting you make is at the bottom of the fourth page, which is under number 6, and rather than going out all the way to 7 years, I'm recommending that we cap this at 5 years. State statutes would allow us to go all the way out to 7 years, but that's a long time for these kinds of monies, because this is supposed to be money that if the city needs it, you can get it. Well, you would hate to have invested something, supposed to be money that if the city needs it, you can get it. Well, you would hate to have invested something for 7 years, 6 months ago, have an emergency in the city, and have to liquidate that back to cash. Now, it would be a pretty big emergency if you have to go that deep into your portfolio, but depending on what's happening with interest rates, it's a sizable loss. And so I'm suggesting to keep shorter, maximizing it at 5. That's a recommendation I would make. And then on page 5, under the investment objective, the old policy said the investment objective is to generate current income. Well, I would argue that even under state statutes, municipal monies and reserves, their primary investment is security, that you don't want to ever take a loss in what's there. And the allowable investments under state statutes are pretty restrictive, so that they're U.S. government securities for the most part. They do allow you to invest in other governmental securities here in the state of Wisconsin, but they also have to be A or AA rated securities. I mean, very high, top quality securities when you're investing it, and relatively short term. I think the comment about income should be secondary and therefore come after the primary one. I struck the first sentence and said, this is liquidity and safety. Those are your most important items. And then secondarily, investment income. So another recommended change. Recommending. I would just refer you to page 7, which just lists all of the various times and the intervals that this policy has been reviewed. And only when a change has been made do you see the dates. Sometimes the policy was, and you can see it was reviewed in 2008. I would argue to you that this policy should be relatively stable and shouldn't have to make a lot of changes to this policy. The last time it was looked at was in 16, then in 19. Just because there's going to be a change in finance directors, didn't want to have to put this on their platter for 22. That's why I've decided to do it this year, and then it gives them a little more time before they have to come back. So these are the changes I'm suggesting. Welcome your input.
Question?
Yes.
And I have 2 particular points that I have questions about. And on page 2 particular points that I have questions about. And on page number 5, under restrictions, letter B, where no derivative type investment such as collateralized mortgage obligations, blah, 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 that carry a final maturity greater than 7 years. Given the explanation you gave for 6G, would we not want to also make that 5 years?
I think that's a reasonable change. Yeah. Sure.
Then secondly, help me understand the difference. Page 5, number 8, we say that this investment policy and performance of the funds shall be reviewed each year during the first quarter. And then on page 7, under the liquidity, we say the investment policy shall be reviewed at least every, conflicting to me that we wouldn't review sort of on the same schedule just to kind of keep us honest and not miss one or another, or just do it all at the same time.
I think that's a good observation, but I would point out that the first, starting on page 3, the major caption is the reserve. The caption is the reserve portfolio. So that on this other schedule that I provided you are the investments that tend to be invested for, so that it's a ladder of portfolio. And again, you can see that on this other schedule that I was telling you about. You can see under Again, you can see that on this other schedule that I was telling you about. You can see under institutional capital management, it spreads out over a number of years. Okay, and I haven't done new investments, and that's why it's tending to become shorter in its maturity. Because of that, I think a longer-term review might make some sense for the policy, whereas opposed to page 5, then there's a major capital or major delineator title that's called the liquidity portfolio, which is the really short-term portfolio. And again, I don't think there should be many changes to this. I think this is the most scrutiny this policy has had since in the nearly 10 years that I've been with the city. I mean, I appreciate the questions because actually these policy statements are what are guiding my office and how these things should be done. And so this is in fact what you should be paying attention to is what are the, I'm open to whatever changes you might want to make. And if you want to say that that policy should be reviewed more often than every 3 years, while the first one is reviewed every year, I'm open to whatever change you wanted. That wasn't an area of focus, but I.
Yeah, I was just trying to think, because the policy is cohesive in and of itself between the reserve and the liquidity investments. And it seems if we're bringing it forth to review a policy, one portion of it once a year and another portion of it every 3rd year, and the liquidity portion of it once a year and another portion of it every 3rd year, and the liquidity portion of this policy is relatively brief. Why would we not just give it an eyeball?
Do you want to look at it every year with all of the?
To look at the other portion, at the reserve portion of it every year during first quarter. I can see looking at the performance, but do we really need to review the policy itself every year during the first quarter? Because that really locks us into, yes, you have to look at this policy every year in the first quarter.
And we have for a while, and then we did look at it a couple times, but didn't make any changes.
I mean, as you say, we shouldn't be changing this regularly, so I would be comfortable saying we can review the policy as a whole every 3rd year. But yes, it's good to review the performance.
Change the performance annually, but the policy every 3 years.
I think that's fair.
And I would make that consistent between page 5 and page 7.
Yes.
7.
Yes.
And the policy is to not more than every 3 years, not longer than. And the policy is to not more than every 3 years, not longer than every 3 years. So you could do it at 2, but certainly at every 3-year interval.
I'm comfortable with that.
And I guess, do we want to leave cash? Or do we want to?
I'm sorry, Stuart, your comment was?
Currently, there's no performance. You're not supposed to, or there's no guide for measuring the performance of cash or cash-like. Are we going to uniform both the policy and performance review, or is that necessarily?
I'm still not clear. Are you suggesting there should be a benchmark for both the liquidity and the
No,
reserve?
I just didn't know if we were unifying those statements for both the reserve and the liquidity. If it wasn't just for policy review, because obviously part of the thing was that you're reviewing the performance of the reserve policy review, because obviously part of the thing was that you're reviewing the performance of the reserve investment. Are we then carrying that through to the liquidity investment, or leaving the liquidity investment from the performance standpoint and not necessarily the policy? So we would uniformly do the policy for both of them every, no greater than every 3 years. And then the reserve, we would review annually, liquidity, we would not.
Well, the note that I made, and maybe I misunderstood the comment, was that performance for both both portfolios would be reviewed and could be every 3rd year.
Sounds good?
If the committee is okay with that, that's how I was going to modify this statement.
If I can clarify, my understanding of your question, Stuart, is that because we have a management benchmark for the reserve portfolio, but no management benchmark for the.
Because that's the
problem.
What's that?
Isn't it?
Yes.
And that was going to be my next
Yeah.
question. If you wanted a benchmark for liquidity, what would benchmark
Yeah.
be? And
It's just-
quite frankly,
There's so many different ways of managing cash, it's just impossible to say, here's a performance.
portfolios that we have is the local government investment pool that we have. We don't have a lot of money in that pool, but that is a pool, a liquidity portfolio that the state investment board runs, and a very large percentage of Wisconsin governments, not just municipal governments, county governments, school governments, technical colleges, all these government agencies use the local government investment pool as their liquidity investor. And then it's audited by the state, and so we use their return as a benchmark as to how well American Deposit Management is compensating us for what's going on. And I know that ADM tries to beat the LG at all possible costs. Now, when they're only paying 5 and 6 points, it's just really, really hard. But when the portfolios were paying 60 basis points or 150 basis points, ADM would come in with an extra 3 or 4 basis points. And that's one reason why we have so much with them. So LGIP becomes a de facto benchmark, if you will. Now that can change over time, but that's another reason why we don't have a benchmark, because it's as you're saying, it's cash benchmark, because it's as you're saying, it's cash and it's cash-like.
I guess that's what obviously if we're monitoring the performance based on that for reserve investments, the liquidity investment annually, because we have no benchmark.
Right. But you do see what's going on and how it changes over
You can
time.
still review it.
Sure.
Okay.
You just don't have a measuring stick to say how well is this doing
All right.
against that stick.
Good deal.
And as discussed.
So moved.
Seconded.
Okay, are we all clear on the changes, I think?
Changes as discussed?
Yeah.
That's my motion.
Okay. All those in favor say aye.
Aye.
Opposed? Then is the review of the June 2021 report. June 2021 report. Actually.
So things are moving along as budgeted, as expected. On page 2 of your document, it does tell you what's going on with the landfill site. Keeping in mind that landfill siting revenues are distributed over multiple funds, it's hard to see how that's doing. This chart says, regardless of which funds we're crediting it to, how has its performance worked? Now, I took out some of the variability from month to month. And so I've created this chart with that in mind. You see the blue line is the monthly performance. It's been as high as $300,000 in some months and as low as $150,000 in other months. Okay, so it does move around depending on how much material. Add up the previous 12 months, now you see that variability is nowhere near as great because it's really moving around that $200,000 to $225,000 a month range beginning in the fall of 2019. And even when the pandemic hit, it declined a little bit, but not a tremendous amount. So we are on an annualized basis at about $200,000 to $225,000, or between $175,000 and $200,000, or between $175,000 and $200,000 a month, which puts us on pace to be somewhere between $2.3 and $2.5 million, at least over the last 18 months or so. And then that gets distributed across various funds. The general fund is performing pretty much as noted. Ambulance revenues are a little greater than we might have thought they would be at this point in time. Not exactly sure why that is, but they are. And investment returns are pretty much uglier than we thought because when we put the budget together, rates in the 175 to 200 basis points. And then shortly thereafter, boom, they just plummeted. And now they're at 5 basis points. I mean, it's just crazy ugly. So we won't generate as much investment income as we'd like. On the expense side, general spending money as they budgeted. Now, maybe not being timed exactly the same, but I'm not expecting any significant overages or underages. The TIDs are performing, at this point in time, there's not a lot of project costs being incurred other than finishing up in TID 4, where we awarded contracts in the spring of 2020. Library is doing as expected. Tourism Commission spent $150,000 for the stadium license. It won't receive its resources for the year until the final fourth quarter. Solid Waste Fund, nothing unusual going on there. Capital funds are moving as expected. Utility funds, a lot more water usage this year than last year, so the revenues are up a little bit. Self-insurance fund. We're generating a small loss. We had expected a much bigger loss, and so now I would direct your attention to one of the second last page 41. And on page 41, in the first column, the original budget, we expected to have a $55,000 shrink, if you will, on $3 million in revenue. I'll call it a year. Right now, we're seeing a $70,000 loss on $1.5 million. So we're at the halfway point. We've gotten the revenue we would have expected at this point. And we've got a little more loss than we thought, but self-insurance fund is doing just fine. A year ago, but we're having a few more claims this year than we did a year ago. Well, all in all, I think the self-insurance fund is doing just fine. If you go to the OPEB trust on the next page, we are from insurance. A year ago, it was a $70,000 surplus. But keep in mind here, one large claim. Somebody goes out and now these are retirees, so you shouldn't have a premium in there. But you could have a major heart attack, you could have cancer, you could have some type of major medical event. And since there's only a handful of people in this plan, one person can really cause this thing to go kind of wacko. We've had 2 good years so far of experience. And look at your other investment income. A year ago, for the first 6 months, we had a $275,000 loss. And that was because the markets really plummeted in March and started to come back. This year, for the first 6 months of the year, we have a $766,000 gain. Investment returns can be, I use the term, lumpy. But generally speaking, this trust is doing just fine. I'd entertain questions if you had some on an account or a fund that I just sort of skimmed over, but other than that, I would ask for a recommendation to move this along. Alderman.
Two questions for you. Can you point out, because I'm here, the 1.7 million from the American Rescue Plan shows up in our,
Sure. The American Rescue Fund, the American Rescue Plan resources went into a new fund. We established a new special
Okay.
revenue fund. We don't currently have it because the only thing you see in it right now is the 1.7 million that we received.
Okay.
There have been zero expenses other than a few CD fees.
gotcha, because at first I was thinking it was the intergovernmental revenue in a general fund at
No.
1.785, and then I'm like, oh, that can't be right either, so that's why I was getting a little fund at
No.
1.785, and then I'm like, oh, that can't be right either, so that's why I was getting a little
And
confused on that.
currently, there's no budget to spend that money.
Mm-hmm.
I don't know of any short-term expenditures out of that fund. So I probably need to add it in here someplace so you can just see it, but it's a resource that plopped in and it's gonna stay
Right.
there for a while. And a year from now, we're gonna get another 1.7 million, and at some point in time, we're gonna decide how we're gonna spend it.
Okay. One other quick question, and you may not have the answer for me on this one, but on the Tourism Commission Fund, see we,
So that's on page 22 for
22,
those who are trying to
where
follow
we paid out
along
the
at home.
$150,000, which I know that is for the sponsorship. My understanding was that the Tourism Commission was paying half of the salary of the new tourism, sharing that salary with the Rock. So I'm wondering, have you not received any invoices or receipts, whatever, in terms of paying for that person?
Well, my understanding was that to have that happen was to be negotiated and finalized, but no one has forwarded a copy of that, and I have not seen any evidence that that has come forward to Common Council for approval. So at this point in time, I would be reticent to disperse any funds
Yeah,
from this
okay.
commission
I need to
for
go
that
back and
purpose.
check notes on that.
Agreed.
I just have a little,
As a matter of fact, when the $150,000 request was paid out, I asked for a copy of the minutes from the Tourism Commission approving that payment, because I didn't want the public to come back and say, why did those funds leave?
right,
I wanted to have some evidence that the commission approved that disbursement. But to my knowledge, there's been no
Okay.
agreement finalized.
and budget would be personal services.
Yes, that is correct.
Okay, but nothing's come. Okay, and then I'll go back and check my notes elsewhere. Thanks.
Or I'm batting 1,000.
Really hard. Really hard.
Disappoint me, John. You disappoint me, John.
Answer all myself.
Well, it means that we've got a complete report. Put a
Are there
request
any
to
other
the-
questions? Are there
request
any
to
other
the-
questions? Okay, then I'll entertain a motion to recommend approval.
So moved.
Second.
You have a motion and a second.
Okay. Then we'll take note that we approve the report to the county council. All those in favor say aye.
Aye.
Opposed? Carried. Okay, now last.
We are managing this fund for the city. I like to be transparent and to keep you aware on a monthly basis of what's happening. I personally find these charts to be instructive of what's happening. I hope you also, without getting into it, I did check today after the markets closed. Funds up 50,000 from where it was on July 13th, but 50,000 on 8.5 million.
Way to go.
You don't really notice that much, quite frankly. The big spike in assets from 6.5 million in Q3, 6.5 million in Q3 of 2020 to now, the city contributed nearly $450,000 to this plan. 325 of it was a one-time investment, and the other portion, about 75,000, was excess monies from last year. But the fund is up nearly $2 million in the last 6 months.
When did that money go into the fund?
In Q4 of last year. Due in the next 6 months.
Or tomorrow.
Or tomorrow. But anyway, so that there's a $500,000 jump here in contributions to the trust and $1.5 million in gains, if you will, in the last 6 months. So really, really nice performance. Page 2, though, you'll see that we've pretty much kept the allocation of assets to about 65% in equities and 35% in fixed income or cash. The bond maturity ladder hasn't changed a whole lot all year long. The 20 on that was plummeting to next to nothing, was liquidated earlier this year. And when you go to the individual equity items, there's more variability on that than I'd like, but I'm trying to hold the S&P 500 to about 65% of total equities, and the internet to about 65% of total equities, and the international and small cap at 10%, while the mid cap is closer to 15%. And that's what that chart is trying to show you. Personally, I think that several things are going to impact the markets in the next, in the not too distant future. I think the Fed will begin to slow down its support for the economy by either reducing its purchase of long-term securities or corporate securities, or begin to pull that back, and that'll probably happen mid-part of next year. When the market becomes convinced that that's going to happen, I think the market is going to begin to pull back. Secondly, inflation is rising, but the federal government is talking about a potential increase in tax rates on both long-term gains as well as high-income earners. Corporations see a tax increase, that will be an earnings decrease, and that would likely have a negative or adverse impact on PE ratios and therefore rates.
Yeah, are looking at it. That's not...
Well, if they pass the reconciliation budget, it may be buried in there and not in the income.
But the reconciliation.
That they don't need the Republicans to support. So I don't want to get into the politics of it, but if you're managing investments, it may be a time to be a little more conservative and a little more in fixed income until after more clarity is out there on federal tax policy, as well as what the Fed's out there on federal tax policy, as well as what the Fed's going to do by way of liquidity and items. But there is a tremendous amount of cash sloshing around in the banking system right now, and some of it obviously finding its way into the equity markets, in my opinion. I see some folks might agree with me on that.
Listening to Jamie.
I didn't want to open up an account in Robinhood. No, Robinhood.
Yeah.
But I still like to rob from Peter and to pay Paul. Any action, but just to keep the committee informed of what's happening.
Much appreciated.
Okay, update on past council actions.
We did share the debt issuance planning with Common Council. The May financial report was accepted, and the OPEB investment policy was adopted.
Say anything about the debt issuance planning?
Quite frankly, I have forgotten what the conversation was, but we said it was going to be in the later part of the year. Because the sewer project, which will need some financing, did come back and give me some direction on whether or not the ARPA funds we received might be rededicated towards the sewer fund. The water, because that project has been delayed, is to not borrow the money now, but to come back in the fall and see if any changes in some of these capital requirements were out there before I went to the budget. I will probably in late August or early September start the process for a debt issuance, but once the council adopts the sale, we have 5 years
The initial.
you have 5 years to actually sell. So it's a question of what's going to be, when are we going to need the money and what are the markets doing by way of what's in it. If you're going to borrow money within a 6-month time frame and you see interest rates rising, you might do it a little sooner rather than later just to capture the. Anybody remember it differently? Okay.
I said one thing. I thought we talked, or there was some rumblings about that excess, looking for a direction for that excess money. I thought we talked about maybe street improvement fund.
The capital planning is still a work in. The capital planning is still a work in progress, and I would expect something might come to this committee maybe at its August meeting. We won't do it in September because of the review of the budget unless some of that capital planning becomes a component of the budgeting process. That capital planning becomes a component of the budgeting process for 22.
Was it $300,000?
Yes.
Okay. Because it'd be. I mean, I remember looking for recommendation. I think that's something that we should bring up about where we recommend it to go. And I don't know where on this agenda we recommend it to go. And I don't know where on this agenda we could do that.
Well, so that's the other funds, which is the potential additional landfill siting resource this year and what fund we want to credit. Keep in mind, Common Council can always make a direction to move some of those into another fund.
And I realize that, Paul, but I think it's nice when we make a recommendation to the council and the council's a body, you know, so it's kind of been vetted here and kind of guided here, and not that when we all go home, something here goes awry and then it just disappears.
Is bring back at the next finance committee meeting, at least an agenda item so that you can discuss the landfill siting fees and how they might be allocated.
Thank you.
Because unless it's on our agenda, technically we're not supposed to talk about it.
And I really think that's in your next episode.
Yeah.
Talk about it. And I'll limit it primarily to the excess landfill siting because I think there's some other capital planning related to other fund balances that might become a better place within the capital structure of the budget.
Thank you.
Okay, for future agenda items?
Is there anything else that you'd like to put on the agenda for discussion at these meetings?
I think it'll be a good goal if we can get a draft CIP to this before it goes to council for this.
At these meetings.
I think it'll be a good goal if we can get a draft CIP to this before it goes to council for this.
Well,
We'll use that.
my office isn't driving that. We're supportive of that, but so I don't want to be.
On it now, I will tell you, we've gotten in so many more requests than we all thought were possible. It's going to be a huge 5-year plan. Keep in mind, we here, but I think this is an important step in identifying all of it for the city. So we're putting that together right now. We will.
Thank you.
But we'll alert you to the fact that I'd have some big numbers on it.
Okay, looks like our next meeting date is August 24th, 2020.
I move to adjourn.
Second.
Second is that we adjourn. All those in favor say aye.
Aye.